What's up, investors? Today's video is going to be about Bitcoin. A lot of stuff happened during the week. I want to cover it. I also want to present my investment thesis on the cryptocurrency. I'm going to cover a lot in the video. Make sure you stick around to the very end. An early thumbs up really helps me out, so make sure you tap that like button. If you're new to the channel, subscribe for future content. I talk about disruptive innovation. Bitcoin fits that mold. This is not a crypto channel, but I will be talking about Bitcoin and Ethereum. So if you do own those companies, you want to make sure you tap that subscribe button. But if you're new, I talk about all disruptive innovation. Companies that are going to disrupt big and growing total addressable markets. That's the target. So make sure you tap that subscribe button. But remember, I'm not a financial advisor. It's up to you to do all your own research. And it's ultimately your decision what assets you want to add to your portfolio. Let's talk stocks down below in the comment section. First thing I wanted to discuss and respond to right away was during the week, we got a paper, about a 48-page paper from Bank of America. It was pretty much a hit piece on Bitcoin. They called it impractical. They called it slow. Some other things. The title of the piece, if you wanted to go through it, was Bitcoin's Dirty Little Secrets. I just think this is utterly ridiculous. Utterly ridiculous headline. I keep hearing this on Twitter and on social media, people coming back with this as a reply. Oh, Bitcoin's an impractical asset, like using that word, using Bank of America's argument, which is pretty funny. Because I'm not sure that Bank of America really even understands what's going on here, or if they're just purposely trying to hold crypto down because they are what's being disrupted. Central banks could be in trouble down the line. So I don't know how much of it is like just pure ignorance or how much of it is, neon lights, distraction, hoping and praying, I would equate this to the best analogy that I can make is my grandfather used to tell me that Nirvana and Biggie were music. My grandfather was a really smart guy, but he was always on the wrong side of change. So I never want to be on the wrong side of change. When I see something, despite how much I like it, when I see something better coming along, you got to be open to it. You got to be open-minded. Of course, Bank of America is a big winner. It's an incumbent. They don't want things to change. They're winning, right? So keep in mind when you see stuff like this, the agenda behind it all, behind it, right? So, on the other hand, I just also want to throw this out there too. I would say owning Bank of America is impractical at this point. If you look at their prices here in 2006, way up here, and look at that stock chart way down here. So I don't want to own things that their best days are behind them. I want to own things that their best days are in front of them. So to me, in my opinion, Bitcoin is a better asset than Bank of America. I might get some flack for that, but I'm willing to. My conviction on Bitcoin is very high. And for these reasons, first and foremost, I'm not viewing Bitcoin as a currency. I'm not viewing it as a threat to fiat. I'm viewing it as a store of value. I'm viewing it as a peer-to-peer payment service, especially internationally. Making micro payments, across seas, very useful. But right now, I'm very focused on the store of value market as a hedge against fiat currency. Take a look, inflation data there, printing money left and right? It doesn't work that way. If you could print out of a recession or a depression, we would have never had recessions or depressions, ever. You can't print out of those. They're a Band-Aid. At some point, this printing will be paid for, so a hedge is in order. So when I say store of value, I want you to think of Bitcoin as digital gold or gold 2.0, gold bars, gold bullion, whatever, right? That's the way I'm viewing it. I'm viewing it as a modern hedge. If this was 1975, I would be going to buy gold bars right now. I would be going to buy gold bullion. I would be looking to buy some silver, bonds even. But it's modern. And the world is the digitization of the world is my vision. It is my portfolio and my investment strategy. So Bitcoin is digital gold 2.0, bonds 2.0, savings bonds or gold that you can actually spend conveniently in your day to day, right? So it's not just like you put it there and it's gone. It's convenient. It's a modern. It's a better store of value, a better store of value. You go buy gold and silver. What do you do with it, right? You're just waiting for that rainy day. With Bitcoin, it's useful. That's the idea. And the modernization of a store of value that makes your day-to-day life better. That's how I'm viewing it right now. And yes, it will evolve into so much more with blockchain technology running the show. I believe it's the disruptor of all things. Now, will Bitcoin's blockchain win? Yes, I think they will be one of the winners. But can I guarantee it? No, there's certainly risk associated. It's still very early in the game. So, with that massive upside, sure, there is also some risk associated. Another knock on Bitcoin is the volatility. You'll hear that a lot. It's such a volatile asset. You don't want that's why I believe Bank of America called it impractical. It's because for a store of value or for a hedge, you want stability, right? Like you want it to be stable, and it's not stable. But the thing is, because it's becoming modern and because it's a store of value that you could use day to day, it faces sell pressure, the likes that a store of value like bonds or gold has never seen before. So it causes short-term volatility. But let me ask you, over a long period of time, is Bitcoin that volatile? It's really not. It's only really gone up, and it's gone up a lot. So you can't be caught up in the day-to-days with Bitcoin. If you buy it on Monday, you can't look on Friday and say, "Oh my God, I'm down 10%. Oh my God, I'm down 8%." But it's a store of value that you could buy today, and it's appreciating. Gold is depreciating. I don't know. I hope that makes sense. That's my thesis on it. That it will continue to face short-term volatility because of the sell pressure during the conversions to fiat currency. So in other words, when you take your Bitcoin and you want to turn it back to US dollars, that conversion puts sell pressure on Bitcoin, creating short-term sell pressure, volatility down. But that's okay. The asset overall and the asset class is growing up. It's appreciating. And I'm really excited about it. Like I said here, the gold market cap, I see my 10x. Bitcoin is at $1 trillion market cap. Gold is at a $10 trillion market cap. Bonds are at $100 trillion market cap. So I could see potentially up to 100x. That's my thesis. That's how I'm seeing it. And just some really cool stories from around the way. We've seen Bitcoin's meteoric rise has made Russell Okung one of the NFL's highest paid players. There was a player for the Carolina Panthers named Russell Okung who took his NFL contract of $6.5 million, a salary in a Bitcoin track, which equated to about 240 Bitcoins. Today, already that investment is over 14. It's 14 point. That's $6 million. That 6.5 million is 14.1 million, making him one of the highest paid players in the NFL. Excellent move. I've been seeing a lot of NFL guys talking about it. Like we touched on, Brazil is another one. There was a big story out of Brazil, how they're really embracing the cryptocurrency. A lot of NFL players are talking like this, a lot of celebrities. And now the fact, like we touched on, Morgan Stanley giving billionaires access. I'm expecting the floodgates to open. I'm expecting the rest of the year to be fantastic for Bitcoin. I really believe this should be part of your portfolio. When you look around, pay attention to inflation. Pay attention to these yield curves. This year could be a rough year. Upside could be capped. And what will benefit from that? Let me ask you. Again, if it was the 80s or the 70s or even the 90s, you'd be looking to buy gold right now. But this is digital gold, and that's my investment on it. That's my bet. Sure, it's risky. It's not for everybody, and everybody has the stomach to be a growth investor, and that's okay. Value stocks are certainly good investments too. Stocks that pay dividends, ETFs, all of that. Just get it started, get invested. Start making investments, grow your portfolio. My portfolio, though, is aggressive. I'm an aggressive investor. I'm a growth investor. I'm looking for Tesla. I'm looking for Roku. I'm looking for Bitcoin. I'm looking for Pure Storage. I'm not looking for Bank of America. I'm not looking for Visa. I'm not looking for Walmart. I'm looking for companies that are on the way up, that are going to explode. And with that, there's going to be risk. So, keep that in mind. If Bitcoin's not for you, totally pass on it. No problem. But it's certainly for me. I love this. It's my fourth largest holding. I'm going to continue to buy Bitcoin, even if it goes down a little bit. I kind of hope it goes down a little bit in the short term. I would love to keep adding. I'm wildly bullish here. Especially with a lot of these S&P 500 companies putting it on their balance sheet. I know that Tesla has a lot of it on its balance sheet. SpaceX has a lot of it on its balance sheet. Elon Musk is a big Bitcoin bull. Cathie Wood is a big Bitcoin bull. Chamath Palihapitiya, all the forward thinkers, all the tech thinkers, all the thinkers that I like and respect are Bitcoin bulls. The boomers are not, and I totally understand. So it's got to be looked at. If you're still watching, thank you so much. Please be sure to tap that like button, subscribe for future content, and let's talk stocks down below in the comment section.